Assalamualaikum everybody. Welcome to channel YouTube Triwulandari. Jangan lupa like, comment, and subscribe. Happy watching. Assalamualaikum warahmatullahi wabarakatuh. My name is Triwulandari, NPM 203214005. Audit Accounting 3 Lesson English from Muslim Nusantara Al-Wasliyah University. I will present the accounting journal about the session usefulness of financial information, the role of audit and IFRS. The session usefulness of financial information, the role of audit and IFRS. Abstract. We examine the usefulness of financial information given different circumstances. Pre and post International Financial Reporting Standard or IFRS. Adoption and audit quality. The usefulness of information is deduced from the association between information quality and investment efficiency. IFRS is said to promote more informative financial information and hence should increase the decision usefulness of the reported information. In practice, auditors are the center of reference in the preparation of financial report and empirical evidence so that quality audit enhance the credibility of reported information. Introduction. The importance of financial information in decision making, especially regarding investment, is acknowledged. Higher information quality is found to increase investment efficiency either through lowering adverse selection problem or by elevating information asymmetries. High quality information should contain relevant and reliable information, which will facilitate user in making a decision. Relevant information facilitates decision makers assess present, future, and past events, confirm and correct potential past error. IFRS is claimed to be more relevant to investors because it is more market-oriented and promotes higher disclosure. Literature review and hypothesis development. Financial information quality and investment efficiency. Besides the public sector, the private sector is another significant component in the development of the economy. Private sector or firms invest either directly in projects or the fund of investment in other firms. Financial information is heavily referred to in any investment decision. Firms should invest in profitable projects or investment. A commonly used indicator of a profitable project is net present value or NPV. NPV is the difference between the present value of cash inflows and the present value of cash outflow. Positive NPV means cash inflow are greater than outflow, hence indicates profitable investment. The role of IFRS. In his favor, Leavitt note that accounting standards play an important role in determining the quality of financial information reported by firms. On the subnote, that accounting standard authorities, such as International Accounting Standard Board or IASB, Federation of Accounting Standard Board or FASB, as well as International Accounting Standard Committee or EASC, strive to generate high-quality standard. This brings to the harmonization effort of accounting standard, resulting in IFRS introduction in 2005. Since that, studies have been conducted to determine whether financial information produced under IFRS is better. The role of audit. In other words, the audit adds credibility to the information reported in the financial report. Research in the area of auditing that focus on the credibility aspect is rather scarce. The results show that auditors' independence is crucial to user perception of whether or not the reported financial statement is credible. This indicates that auditors does play a role in providing assurance as to the credibility of reported financial information. The association between financial information quality and investment efficiency is stronger for firms audited by higher quality audit. Research method sample. All firms listed on the main board of Bursa Malaysia from the year 2001 until 2011 are a potential sample. Firms in financial service, however, are excluded because they are subjected to different regulations. Table 1 provides distribution of the sample by industry based on the data stream industry classification. The sample is represented by 20 industries, with the greatest number of observations coming from construction and food producer. These two industries make up 30% of the total sample. The studied periods are from 2001 to 2011 and divided into pre and post IFRS. The IFRS was introduced in 2005, but Malaysia started the conversion exercise only in 2006 on MASB. The free IFRS period is therefore said to be between the year 2001 and 2005, while the year 2006 to 2011 represent post-IFRS the number of observations for pre and post-IFRS. The number of observations for pre and post-IFRS is shown in table 2. From this total sample, 45% are audited by Big 4, while the remaining 55% are audited by non-Big 4. Investment efficiency. Investment efficiency is the dependent variable of this study. We define a firm as investing efficiently if it undertakes investments with positive net present value or NPV. Similar with past studies, investment efficiency is measured as deviation from expected investment using a model that predicts investment as a function of growth opportunities. Financial information. Quality. There is no universally accepted measure of financial information quality. The frequently used measure discretionary accruals measure revenue-based discretionary measure as applied. For our main analysis, we choose the discretionary accruals measure. This model is based on the original model but contains a quite substantial improvement compared to other variation models. Moderating variables. Since then, empirical studies provide evidence that the size of audit firms do represent quality. Based on this, our study used Big 4 audit firms as an indication of audit quality. This is a categorical variable. Firms that are audited by one of the Big 4 audit firm is coded as 1 and those that are not coded as 0. Our second moderating variable is IFRS. IFRS is also a categorical variable with a period to IFRS. Adoption coded as 0 and period post IFRS coded as 1. Control variables. We include firm size, age, leverage, and return on asset as control variables. We also include firm fixed effects in all models, which is a common approach for controlling for firm-specific effects. Size is the firm size and measured by the natural logarithm of total asset. Age is a firm age proxied by the natural logarithm of the firm in years. Leverage is financial leverage measured as total debt divided by total equity. Return on asset is measured by net income to total asset. Model specification. In our model, The effect of financial information on investment efficiency is limited by 1 year to take into account the decision making is a process that is not done improperly. Hence, to test our hypothesis is whether financial information quality in year T affects investment efficiency in year T plus 1. We estimate the OLS regression as shown in question 3. ENVFV T plus 1 AIT plus B ENFPIT plus B control variables T plus sigma IT, where ENVEF over or under investment yield is the absolute residual of regression model 1 above, multiplied by 1 the absolute residual of model 1 is an inverse measure of investment efficiency, meaning the lower absolute residual so the higher investment efficiency. ENFQ Financial Information Quality Measured by Ball and Sivakumar, 2006. Discretionary accruals measure as shown in question 2. Result and discussion. The results show that the normality issue is not the main concern. The observation on continuous variables, investment efficiency or ENVEF, information quality or ENFP, says of firm size, the age of firm's age, leverage or leave, and return on asset or ROA all indicate that the data is almost normal with skewness around 0 and kurtosis around 3. The moderating variables, IFRS and audited quality or audit are categorical variables. The correlation test is performed to gauge whether there is a binary correlation between our variables. The test result can also indicate whether there is a multicollinearity problem. Hypothesis testing. The association between the dependent variable or ENVEF and the independent variable or ENFP is estimated using final regression with a fixed effect model. This method is chosen after the result of the likelihood test or polled versus fixed indicates that a fixed effect is more appropriate and Hausman test or fixed versus random result favors a fixed effect model. To take sure that the regression results are reliable, we conduct several diagnostic tests on the estimated regression. First, autocorrelation is tested using Gardner-Watson statistics. Conclusion. The results show convincing evidence that financial information quality is associated with investment efficiency. This indicates that financial information is useful in decision making regarding investment. Being promoted as a high quality standard, the adoption of IFRS is expected to increase the usefulness of financial information in decision making. However, opposite to expectation, the IFRS adoption doesn't improve the decision usefulness of financial information. H2, audit quality is however significantly strengthening the relationship between financial information quality and investment efficiency. One deduction that can be made is that the user of financial information trusts the information that is financial information trusts the information this is being audited by the higher quality auditor and see the information as more credible. Thanks for watching guys. Wassalamualaikum warahmatullahi wabarakatuh.